Hello, and welcome back to our series, Vertical SaaS, Fintech Disruption by 1,000 Cuts, sponsored by our friends at Pipe. Today's episode is the sixth and final episode in our series, and it's a great one to end on. Luke and I talked to Darragh Buckey, founder of Increase, a banking-as-a-service and embedded finance platform. Thanks to Luke and Darragh, this is an episode by Fintech infrastructure nerds for Fintech infrastructure nerds. Honestly, I felt fortunate just to be able to listen to the two of them talk shop about the rise of vertical SaaS and embedded finance, the challenges in making the plumbing of financial services accessible to and useful for developers, the ongoing evolution of banking as a service, and the unexpected challenges that come with scale. Even before hitting record, I knew this episode would be a great one, and I wasn't disappointed. So without further ado, here is Luke and I's conversation with Darragh Buckey, founder of Increase. Okay, well, Darragh, thank you so much for joining us.
Cheers. Thank you for having me.
We are delighted to have you, sir. This is our final episode in the series, and so we thought it would be good to bring on someone who could speak sort of broadly about the space and kind of what's happening, and maybe give us some thoughts on sort of where things are headed next. Before we get to that, though, I would love it if we could set a little context. And first, I talked a little bit about this in the intro, but could you give us a little background on yourself and then a little insight into what Increase does?
Of course. So I run a company called Increase. We're an API-first banking core. And what that means is we expose all of the standard things you can do with a bank, but programmatically by API. So being able to open an account, being able to originate or receive a transfer, balance or transaction reporting, all of the standard stuff that you can do in a branch with enough paper and persistence. The users and use cases that we typically have are folks who are sensitive to being able to orchestrate their finances programmatically. So a lot of payroll companies, bill pay companies, loan servicing, neobanking, that sort of thing. Some users who have given us permission to say some of their names, Ramp, Stripe, Gusto, Pipe. So it's a lot of names and brands that you might know and love. The way we operate is we run our own banking core, so our own maintenance of transactions and balances. But importantly, we also connect directly to the underlying networks. So we connect directly to the Federal Reserve for the US depository rails of FedACH, FedWire, Check21. We connect directly to Visa for our card issuing products. We connect directly to a group called the Clearinghouse for real-time payments, RTP. And our role is very much high fidelity pass through of the data and capabilities that exist within those underlying networks. We take I personally feel very strongly that the networks that we have in the US are very, very good fundamentally, but the part that we're missing is kind of the last mile delivery of those, exposing all of that functionality and data with the assumption that someone else will want to build something else on top of it.
Got it. And just for clarification, because as you're talking about sort of delivering and building things on top of it, your background in the industry is very much on that sort of developer side. Can you talk about that for just a sec?
Sorry, yes, relevant detail. I was early on at Stripe. I was Stripe's first employee, where I built out the team responsible for programmatic interaction with financial partners. So kind of the short version is increases the banking technology that I wanted while building Stripe. Stripe was built on top of a number of fantastic partners, kind of primarily early on was Wells Fargo. And it was always fascinating seeing the data and capability that existed one layer deeper. To give an example, Stripe was hesitant about doing disbursements to merchants, so payments to folks by wire, not because Fedwire has fundamental limitations, but because when a wire was unable to be delivered, Stripe would receive an email from Wells Fargo. And it's hard to build good, reliable product on top of email scrapers and IMAP. That isn't any fault of Wells Fargo. Wells Fargo built their systems under certain assumptions of users and use cases. It's just that Stripe needed to use those systems at a different scale than was originally designed and intended for. It's super useful that that we drop down that technology layer, right? That we have companies that connect directly to FedACH and Fedwire and contemplate that other people will want to build products that depend on programmatic interaction. Did I talk to the thing you want me to talk about, or was I off on a tangent?
No, that was great. And, Luke, it reminds me of something that you and I have talked about across this series, right? About this idea that, these systems that we have are not necessarily bad, and they actually work quite well for what they were designed for. But the challenge as we move into this new era is that they just didn't contemplate certain use cases or certain ways in which we need to interact with these systems, right?
I think you guys are being too nice to the banks that have been doing this for a long time. I mean, fundamentally, they're just not as good at tech as Darragh and team are, right? Even Stripe early on didn't do it the right way from your perspective, Darragh. But if there's a bank in the middle and it's tasked with interfacing with the counterparty on your behalf, and you don't like the way they have the tech set up, like there's nothing much you can do but go around them and try to do it yourself. And like you're one of the first that's actually gone around like straight to the metal here to like do all of the things that Pipe needs to do for our customers, for our partners and the underlying customers, right? It's just easier for us to get real-time information back and forth than having to wait on an email or yes, the ACH files are still slow, but you've got some pretty slick stuff on that side too that makes it super interesting. But like I think you guys are too nice to the banks.
I think you're being very kind. Well, to me, not to them. If you'll forgive the analogy here, I kind of view a lot of, listen, both of you end up in cities every now and then. You likely end up riding public transit. You maybe even ride the New York subway. It's the best way of getting around New York.
Yep.
And there's nothing, New York subway, fundamentally, trains in tunnels has existed happily for decades. But the product experience of that has changed in the last couple of years. You walk down to the subway now and there's a board and the board says next train in 3 minutes. And you're like, great. That's actually what I wanted to know. I wanted to know whether I was getting sweaty here for 15 minutes or I was out of here soon. Your payment as you walked in was just tap the card versus my Metro card is running low. I guess I'm standing in line. But fundamentally, the rails haven't changed. We have just done a better job of adding product layers on top to make them more useful, to increase the transparency around it. And so the fundamental rails of the US, underlying the US economy, are good. We just need last mile delivery on it. And it's especially useful if you're able to take kind of a view towards how someone is going to use the good and reliable rails.
Well, that's something I want to ask about, because to me, and this is the kind of the theme of this series really, is a real reimagining, or maybe broadening is the right way of describing it, of how people are going to use these rails, right? Because we're going from this environment where a very small number of institutions are sort of entirely vertically integrated from the end product that's touching the customer all the way down to the rails. And we're going to this environment where that is being much more divided up among different roles for different providers. And at that top layer where we're interacting with customers, we have vertical SaaS, right? Which is all of these diffusion of different platforms that are tuned to very specific use cases, very specific industries. And, Darragh, Luke and I have been talking about this nonstop for the last 5 episodes, but would love to get your take on just what you're seeing in that space and maybe kind of how that jives with some of your experiences working at Stripe and enabling, companies in this area. Because I've been candidly shocked at just how diverse and interesting and unexpected a lot of the use cases that get surfaced through this vertical SaaS channel are.
Isn't it great?
It's the best.
You likely have had the experience of arriving along at a service and really feeling like the service like knows and gets you, right? Like at a broad level, one of the things that folks most enjoyed about Stripe in early days was you arrive along to Stripe's homepage and it's just obvious that it's for developers, right? Like the documentation is just there. Someone is talking about how, bearer auth within the API works. You're not feeling like you're going to need to bring someone along on your journey as to what you're going to use this thing for. For me, a lot of vertical SaaS plays the same role, right? Like if you're a lawyer and you go along to the payment site and it's speaking about, the integration in with the standard enterprise resource planning tool and with here's how you construct this with your interest on lawyers' trust accounts. So some kind of niche banking product that exists for lawyers. The sigh of relief, right? The sigh of like, great. I'm not bringing someone on my journey, right? Like they just get me, like I found my people, I'm home. And being able to do that within like finer and finer verticals, I find fascinating. I think it's a great way for us to build product. I think it's a great way for us to build businesses. I think that you're like truly showing what the differentiation of a industry knowledge can do.
Well, and to that point, and maybe Luke, you can jump in on this. The other thing I just am fascinated by in this space is it speaks really specifically to small business owners, I think, right? Because the other thing, in addition to everyone wants like software that gets them and is sort of tuned to them. But the other thing with small business owners is they just have no time, right? Like they're just absolutely pressed for time. They have no interest in sort of the administrative minutia of running a business. They just want to be a lawyer or make pizzas or install HVAC systems or whatever it is they do. And it feels to me like from a vertical SaaS perspective, anything that can like give you that sigh of contentment and then let you get back as a small business owner to the thing you actually want to do is just a huge win relative to the average.
I mean, fundamentally, I'm sure we talked about this on every episode, but like I was lucky to get to spend a bunch of time at Intuit and at Square. And arguably both of them are horizontal type plays, right? Yes, Intuit served everyone, but they treated the landscapers and restaurants kind of the same. And so when a landscaper shows up and there's nothing specific for them, there's no aha moment, right? Yeah, it just gets the accounting done. That's great. But when you have folks that are narrowly focused on the actual things that business, the tasks they complete every day, like thinking about it from the underlying small business's perspective, like what tasks are you completing if you're a plumber or an electrician? It's appointments. It's managing inventory. It's managing schedules of techs to go out to houses. It's like getting the work done, ordering stuff from Grainger and Home Depot. Like it's just very, very narrow. I think Slice is a really great example too. Like Toast has done an amazing job at like helping restaurants run their business, but Slice is taking Amazon logistics like steps now, going even deeper. They have regional warehouses, they have boxes, they have call centers that can be the call center for your pizza shop. They can help do all kinds of stuff, like delivery drivers for certain regions. They can just give you extras. Like that's like being a franchise, right? Like having the support of a franchise behind you. Like that just didn't exist before. And so I think we're still sort of at the beginning of the verticalization and like helping end to end for these businesses more so than just the task completion, right? And then like I sort of think about you, Darragh, as being a vertical for a financial services business like Pipe, because there's lots of things we have to do. We need to go do them. Like it's very easily perfectly solved, like you described for Stripe, which is our engineers need the direct. Like they need to see the API docs. We want to get stuff done. So like I think it flows all the way through the chain with every party involved. Like it takes a ton of stuff, and we still have to work with the banks to make all this happen. Remember, like you don't get to ignore them, right?
Fascinating. I guess I view us as far more like horizontal in this way, right? Like our role is just. And I imagine it's the same for many other of the building blocks that kind of stack up here. Our role just being contemplate that someone else will want to build the thing on top of you and pass through in high fidelity all of the underlying details. Like we try not to hide stuff from you. Your folks are like as good as you come across and don't need us to abstract any detail. Passing that along to you in high fidelity, such that hopefully we can get rid of some of your administrivia, but not trying to hide any of the details.
I mean, I guess just one quick pushback on that, though. Like, there's some low tech folks that probably can't use you guys because you are all API driven. So, like, I guess if the horizontal is like highly skilled tech enabled partners, then yes, I'd agree. But there's a bunch that still can't use you guys.
Oh, agreed. We are. We certainly would not claim that small businesses across the nation should use us. I don't think me surfacing the input message accountability data to a small business is quite the sigh of relief aha moment that it might be for me.
No, you are, I think, wired very different than your average small business owner, is fair to say. So the other thing I want to ask about, which actually dovetails really well into this discussion, is embedded finance in the context of like these vertical SaaS, right? Because it does touch on this area you guys were just discussing about the difference between being sort of prescriptive in how you deliver an experience to the end customer versus being sort of open or modular or configurable and just passing along things in high fidelity and not hiding things from the users. Essentially, the difference between, maybe we think of it as a user versus a developer, perhaps, is the right framing for it. And I'm curious about that in the context of embedded finance, because I'm trying to think of the right way to describe this. I mean, Luke, we've spent the last 5 episodes kind of pulling apart the different parts of vertical SaaS and embedded finance. And one of the things that kind of keeps coming up is this idea that, embedded finance is this very obvious opportunity within vertical SaaS, right? I mean, payments touches everything. You really can't offer most vertical SaaS products, I don't think, without touching payments in some fashion. And then once you touch payments, it becomes very obvious that you might want to think about banking. You might want to think about lending. That lending can be based on cash flow data that's coming out of the payment. So it just sort of naturally kind of pulls itself through. But, I guess, Darragh, the thing I'm curious to get your perspective on, and Luke, chime in here as well, is how much configurability do you want to enable these vertical SaaS companies to have, right? Like, if a vertical SaaS company comes to you and says, hey, we want to enable financial services, so we think it's an obvious fit for our users. Is this like pick off of a menu? Here are the 4 things you can bring to life for your customers. Is this, hey, here's the toolbox, build whatever you want? Is it different depending on the customer? Like, how do you think about that?
Yeah, I think it varies based on the level of sophistication of the vertical software platform. There are times when you do want a more opinionated product, and like, you're running the embedded banking layer for dentists. It's likely similar to the embedded banking layer for orthodontists. Right. Fair enough. I view product as so hard and core and crux to every business, right? Like, the truly living within your users' shoes, to understand their workflows better and to understand like the true trade-offs that they go through, as just like by far and away the like hardest thing that we do within building companies. It is not writing lines of code anymore. It is not structuring the partnerships anymore. It's not even navigating the compliance and regulation. It's like just the nuance of building that product. And that to me is so like so valuable, and so where all of the hard work happens. At this stage, I'll confess to increases takes a very cowardly approach to product. We state very few opinions. Our whole thing is, I'm not going to abstract over anything. I will just pass it through with high fidelity. It's the least creative way of building product. I suppose this is a distinction between Stripe and Increase, right? At Stripe, it was, I'm a developer who wants to do payments, and I don't really, I may or may not care about the underlying details. And at Increase, it's very much, I know and understand what ACH is, just pass it through at high fidelity. So I think because I weigh the work of the like product building within an organization so highly, I'm very aware that increase doesn't do most of that.
It's super interesting. Like your I don't know, you call it cowardly. Your cowardly product approach makes it ultimately flexible for us to offer whatever we want, because we don't have to like design around something that you did that we didn't like. We just get clean stuff coming through. Like, so and I feel the same way about all of our SaaS vertical partners. Like, there's no way that we can go think about 25 or 50 different industries and ever have a chance from a product perspective of serving them very well. And so the SaaS verticals can focus and nail every single individual pain point of very niche specific industries, right? Like you mentioned lawyers, like it's a very narrow one where there's real controls on trust accounts and fiduciary things you can and can't do with money. That's complicated. But those SaaS verticals that focus on attorneys know that. And like they solve those problems first because it makes it super easy for the attorneys, right? But when you take a step back from that and say, okay, well, what is the next pain point? And when you think about something like access to capital as the number one pain point for most businesses, Pipe's really good at that part. Like, yeah, we know how to take risk on small business. We know how to get a super seamless, frictionless funnel put into product. So as just a bolt on to somebody else's amazing product, we have a pretty slick experience that we know works for that one thing. For card issuing too, like we can issue cards through Increase, but we can create these amazingly complicated, sophisticated things. It takes different parts of fintech to put different stuff together, but it works because we have bank partners that understand it. And we have someone like Increase that just gives us the tools to move the money, to do the KYC, to do the individual pieces we need to do. And it makes it easy for us to build. So it's this interesting layered approach where one SaaS vertical solves the main day-to-day task completion pain points. We can focus on risk and great customer experiences for like bill pay and card spend management with receipt capture, maybe invoicing one day or accounting, like all that stuff. But we still have to be able to do all the hard stuff, like the highly regulated stuff of moving money. And like the stuff Darragh does is so complicated. We never would want to build that stuff. Like we can go so much faster by having a partner like Darragh to go do it. Right. And so I think it's the same thing, like our SaaS vertical partners can go so much faster on capital and card and bill pay because Pipe handles that complicated part. And like this layered approach actually lets us help these small businesses better and faster. Right.
Yeah, I wonder if I'm just articulating the sort of core point of capitalism here, but I do think that like what we're describing is like this idea of specialization, which really seems to be dominating this area, right? Where it's like, I mean, the way you're putting it, Luke, makes a ton of sense to me, where it's like, hey, we would never want to do that complex bit over there. Like we just have zero interest in doing it. We have no special ability to do it. It would be horrifically painful and expensive for us to even try. Maybe unique to financial services, it would be risky for us to try. And then Darragh, maybe this is an area where you could pick things back up. But like the other thing that makes embedded finance different from maybe other versions of this, right? Because you see this in you see this in all kinds of embedded software widgets, right? Everyone's trying to build infrastructure for others to build software. But a lot of that other software for those other areas that's not financial services, it doesn't come with that regulation and risk bit that we have. And that to me is one of those areas that makes it even more complicated and even more beneficial to partner with people who specialize in those different components, because I'm sure you guys have enough stories and examples of this to fill a book. I'm just aware of a few, but you talk to people who are building in this space and they'll be like, well, can't we do this? And you're like, yes, you could theoretically, but that would run you into trouble with this, and this. And you give them a bunch of acronyms that they've never heard of. And they're like, oh, wow, I'm glad you were here to tell us that, because we just would have stumbled right into that electric fence without knowing it was there. There's a lot of that in the embedded finance corner of vertical SaaS, right?
Yeah, I like the ideal is that someone can use your APIs in your layer without either accidentally or purposefully running themselves into a problem they didn't know they were running themselves into, right? Yeah. If you're talking about funds availability policies or, details that need to be on statements, right? Like, the ideal is that it's not possible to use the thing in a way that gets you in trouble. Some of that, actually becomes product work. If I was to point towards one, it would be, I don't know, there's a notcher rule around how to do reversals on ACH, and there's certain fields that have to be filled correctly, right? Like, and it's just easier if someone provides a API endpoint that says reverse this thing, right? I know that you will fill in all of the details correctly. This is prevalent within finance and banking, certainly more than it is within other industries. But I feel this is where sometimes taking a technologist approach can help. Now, I want to step gingerly here, because I feel there's oftentimes a technologist runs into finance and says, let me solve all the problems for you, I'll know better.
Sure.
And that's not what I'm suggesting. I'm suggesting more that you need folks from both sides dipping their toes in the other direction. But it's certainly useful if the technology that you're implementing can point itself back to the true source of the regulation, right? Like, great, what are the required elements within the Bank Secrecy Act? Great, and we're collecting those all correctly, and we have high confidence that all of these are being passed through as they should. Perfect. And now what sits at the bank policy level? Great. And we're all collecting those details correctly and passing those through. And how are we validating those? Okay. And someone is checking that against the registered agent list, for example, which is not acceptable as an address. And it's useful that someone feels kind of end-to-end ownership of making sure that at the end platform, the end vertical software company, like, doesn't need to think as deeply about the things that might pierce through some of those product layers, right? It would be super annoying if the vertical software company for the orthodontists needed to contemplate whether or not they were like checking the registered agent address or the physical address, right? Like that's not the kind of layer that you can expect someone to do well.
It's interesting. Like, this is highly regulated and highly risky, and there's banks in the background. The technology actually helps the banks monitor and make sure stuff is happening the right way. We all have seen the stories about some BaaS players that have messed it up and didn't have the ledger the right way, or didn't maybe do KYC the right way. And the bank should have been monitoring in a way that made sense. There's technology now that helps the banks do the monitoring, right? Like, when you take the operational risk kind of out of the bank and do most of it in an automatic way, like keyed into the rails, like it simplifies a lot of the edge case risks. And then when you have the right like controls, like we apply a BSA policy of a bank to open bank accounts, and they can we can't change the rules on how how the policy works unless they approve that, and they can see real time over our shoulder what's going on, right? Like, technology really helps these partnerships actually work. So I'm super excited about where we're at now, because it's just getting better. Right? Yes, there's some cases of stuff not working very well, but the stuff that I've been involved with at Intuit and at Square, like it's starting to work way better now, right? Especially with the technologists helping solve these pain points. And with AI coming in, what used to be like sample monitoring can be full on monitoring of every single case 24/7 and flag stuff when it's not working right. We were talking to the FDIC, like a bunch of CEOs in tech, like 2 weeks ago. And that was one of the major topics of conversation is like, how should we be thinking about AI from an exam perspective and monitoring perspectives? Like, you need like AI exam managers that can just make sure the edge cases don't happen. It's going to I don't think people have really sold any of this tech to the regulators yet, but they need to be using these tools as well to make sure everything stays safe. I think it's a fascinating spot where we are. Like, you don't need to sample anymore. Like, you can just monitor everything.
Yeah, it's fascinating. And Darragh, I'd love your perspective on how this is evolving, because, again, tying back to this kind of core thesis that we're building here, it seems like the market is inevitably pulling us towards greater specialization, because that's what the end customer wants. So they want that sigh of relief moment from using software that understands them. To deliver that level of specialization, you need a company that specializes in that and doesn't specialize in all the other things it takes to build that, which means they need to work with a stack of different partners that are all integrated. As we were just talking about, and Darragh, I think you outlined it really well, like, there are a lot of risks to those different layers of the stacks unless they're well coordinated and can speak to each other. And, Luke, as you were outlining, technology can actually make that a lot better. And I think mean, if I'm being critical of anything that's happened in the banking as a service space over the last couple of years, it's that we weren't as much leaning into those capabilities as we should have been. We were sort of applying old rules to a new model, and it wasn't working very well. But I mean, Darragh, when you look forward into how all of this stuff is going to evolve, particularly on the kind of regulatory compliance side, with the stuff with AI that Luke was mentioning, like what jumps out to you as being notable or something we should be watching for?
Yeah, I end up in a different conversations, right? Like I end up in banker conversations, I end up in technologist conversations. So I don't want to shortchange you on one of those versus the others, but let's go. Let's go one first. On the banker side, oftentimes I get the pull asides of like, what should my institution be doing with artificial intelligence? Mm-hmm. And it's super hard for me not to echo back to like, I know, 2015, 2014, when you may or may not remember this stage, but as self-driving cars were like, hitting their peak buzz.
I remember this, yeah.
There was towns up and down the peninsula, San Francisco Peninsula, which were trying to attract cars or to attract the companies, right? Like Uber, you should come build here. And they're like, what would you like us to do? Would you like us to like put magnets in the road? Would you like us to, put lasers on the traffic lights? And the car companies, the self-driving car companies were like, thank you. Can you fill the potholes and paint the lines, please? Right? And it was just can you just do the thing you're meant to do? It's a wholly uncreative thing. Don't worry, we'll solve it. And so anytime with respect to, what should my bank be doing with artificial intelligence, I'm dragged into the do your systems talk to each other? Like, do you have any manual porting of data between different things? If not, don't worry about anything else yet. Just spend some time in that. And it's not a small thing, right? Like it's a big project and it takes time, et cetera, et cetera. I'm not meaning to like discount it, but like, don't worry about this next part. Just paint the lines, fill the potholes. Okay, that is usually what I end up talking to regulators about, or to bankers about. But on the increasing specialization that happens within software companies and how you're adding these layers, yes, certainly, it's another layer to extend. I pride myself on being able to go deep in many systems, right? But if you asked me what fundamentally like Google Cloud is doing too many layers beneath me, you'd very quickly find me lost, right? So we're already in an industry that is good at building on layers, right? Like we're already an industry that, I'm not in any danger of going out and getting sand and melting it down into silicon chips anytime soon, right? Like we're not bad at building on top of layers. This is just yet another layer. It takes time to get good at understanding what should be in a layer and what fundamentally needs to penetrate through a layer, right? And so say, for example, we might have been particularly bad in the last couple of years with knowing which compliance parts should poke through or how best to address them or at which layer to address them. But the fundamental, lasagna that is our business, right? Like layers are not new to us. This is yet another layer.
Just back to the AI thing real quick. The layer things, like our entire economic system is based on layers. Like I love the example of the sand and building chips, but there's way more of like just growing the food even. Like it goes all the way down the system. Like that's just the world we live in. I think on the AI side, like interestingly, I do agree to some extent, like your core systems need to talk to each other and everything should just work. But we're seeing use cases now where you would normally say, okay, we need to build another dashboard that pulls data from these 4 places so our collections agents can actually see the stuff that they need to see to do a very quick call. It summarizes everything. And instead of actually building a dashboard now, we're using AI to just go collect the data, pop it into the same dashboard screen, but you don't actually have to build the connecting. Like it does the same thing, but you use AI to enable the data gathering. And so like I think the connections start to shift when you have agents that are smart enough to gather what it needs, as long as it's accurate, to just display the information for a human to make a quick decision. So I think you're getting to the same place. Like, yes, they're talking to each other ultimately, and you're recording a decision and it gets back into the system, but it's happening through AI connections instead of API connections. Or AI controlling APIs. I don't know. Like, you're better at the tech part than I am.
Well, it is interesting, right? Because I think the thing we're kind of touching on here is that, as these different areas shift, I think value accrues in different places, right? And that's always the thing that's hard about this is, yes, we're all accustomed to building in a layered environment, but when the rules change, the value accrues to different spots in the stack, right? And Darragh, one of the things I wanted to get your take on that we've been talking about over the course of the series, and thematically, the theme of this episode is like scaling up and like, where do we go from here? One thing that's interesting to me is vertical SaaS is now not totally new, right? Like, obviously, it's continuing to evolve. It's continuing to get even more specialized, as Luke was saying, the difference between, a square versus a toast versus a slice. Like, it's continuing to kind of march down that path. But we also still do have Toast, and we have all of these companies, some of whom we've talked to on the podcast, that have been around for a while now. How would you talk to, executives at a vertical SaaS company, maybe one that's a little more mature and has been around for a while, about how they should be thinking about like staying agile and continuing to innovate? Because I kind of feel like in some ways we're going to see a similar almost sort of incumbency mindset start to take hold with some of the more established vertical SaaS companies. I'm curious just like how you would talk to folks about that, or like how you would view that sort of challenge. Because I mean, we see that everywhere, right? I mean, Stripe is now a fairly old company in sort of startup terms. Like, this happens over time. How do you stay on the cutting edge? How do you stay agile?
Yeah. Boy, do I wish I had a short answer for that, right? Like, yeah, and it's like watching for the super narrow company that comes along and steals that part that you didn't think was important, etc. And I don't think I'm in anything more insightful than Innovator's Dilemma territory here. But the staying close to user is trite, but just true, right? Like, it's always watching where the gripes are coming about and trying to address those. And determine whether or not someone should be within that core segment of yours or someone shouldn't be, and it's time to move on. I don't think I've anything overly insightful here that's not just quoting from business books.
No, staying close to users makes sense. Go ahead, Luke.
I've seen it work and seen it not. Like, it's so interesting. Like, coming from Intuit, like the Quicken, the original version of the software that Scott Cook and his partner wrote, was written in Pascal for the DOS operating system in 1984, right? And they famously reinvented themselves by moving the same customer experiences to the cloud, right? With QuickBooks or QBO, like first for businesses with QuickBooks installed on-prem, and then with QBO. So you can reinvent yourself, but it is not an easy thing to do. Like, and it's because of the innovator's dilemma. Right? I think Bill Harris left Intuit because he wanted to go to the cloud faster and he couldn't get into it to move fast enough. And he's done some other amazing stuff. And so like, it's just so hard to create like new, modern, protected like squads or pizza box teams to go do stuff. I got to Square and I thought, man, this is so fast. Like, we can build stuff so much faster than Intuit. And I'm like, but when I get to Pipe, I'm like, oh wait, Square had a 10-year-old Ruby monolith and it was still super slow. Like, and then you like, it's eye opening when you have to allow a reset moment. You have to get a new team, protect that team to go innovate within a bigger business and protect it from the old stuff. Like, that's the only way I've seen that like innovation keeps continuing. It's the hardest thing to do because you're running really like 2 or 3 businesses at once. You're running the old one that has to scale. Like, for our capital business, it's scaling rapidly. Like, we're going to have to maintain that thing perfectly and scale it. You don't want to mess with it, but you also want to like do a brand new card product and a brand new bill pay product, and maybe invoicing. Like each of these teams shouldn't be hamstrung by the platform or stack. They need to be able to go find this increase or the next increase to help you go faster on the next thing. Maybe internationally, you need somebody else. So from a leadership perspective, this is the hardest thing to do, right? Like keep teams excited, engaged, and innovating. Like I don't know anybody that does this super well. Like a few companies do over short periods of time, but like I don't know that people have done it for 30 years straight. It's pretty amazing if they do.
Yeah, well, and I think the other thing to add to that is just that, like, it depends on the industry and the dynamics in that industry, right? I mean, this vertical SaaS thing that's so interesting to me is there's this just inherent tension between staying close to a very specific segment of users versus the natural inclination of a business and the incentives you have from a fiduciary perspective to grow and expand and go, hey, dentists aren't that different from orthodontists. I'm sure we can serve them too. And to a degree, that's true. But you start to kind of eat into that specialization and that like, that contented sigh moment that we've been talking about, where it's like, I picked up a piece of software that's exactly built for me. You can't exactly build perfect software for everyone. If you could, there'd be one software company for everyone, and there's not. And so I find this tension between vertical SaaS, which I just love, going back to Darragh's earlier comment, the tension between that and the natural incentives as a business to grow and expand and do what you do. Like, I'll be fascinated to see how that plays itself out. To wrap up, I would love for each of you to kind of put yourself in the shoes of someone at the beginning of this journey. So we just talked about kind of later stage companies that are in the vertical SaaS space. For someone newer in vertical SaaS, and particularly for someone at the beginning of their embedded finance journey, where they're trying to think about, okay, I know it makes sense. Maybe I'm the chief fintech officer at a company where no one else knows what the word fintech means, and I have to think about what my strategy is here. How would you approach kind of giving them advice on where to get started, what to prioritize? Darragh, maybe I'll direct that question to you first.
Yeah. I think you laid this out originally, which is money movement typically ends up being, a required first step, right? Money storage can be sometimes a natural extension of that, and then money lending is an extension of that again. The amount you can mess up in each of those varies, right? You can mess up money movement, and you want to be careful, but there's only so yes, you can still mess up money movement. Money storage, you really do want to be very careful, right? Just because there are, that's someone's, those are the funds that are available for someone to pay their employees. Yeah. There's a different degree of weight there. Money lending is where I'd be like, you should talk to Pipe. Are you sure you want to develop that specialization yourself? So I'm not meaning to shortchange you on an answer there, but I do believe that's the natural point in spectrum. Usually the first things you're doing with money movement are getting paid yourself, right? Like, and then perhaps you're facilitating getting paid and your users' accounts receivable or accounts payable setup. And then you're talking about how to move things faster or how to communicate the reliability of that. Great, we're an accounts payable or a product. And, our payment mechanism of last resort is a check, but it's super useful that someone's able to get, all the postal service updates on where that money is so that you're able to communicate reliability through the transparency of being able to talk about where every cent is at every second. Certainly, there are exciting things you can do when you get into money storage, but starting on easy mode and seeing whether or not that's fundamentally true and core and crux to your own users, or whether or not you enjoy the hobby of financial technology, but it does not need to touch your product, can be useful. I'm not meaning to talk people out of introducing financial ecosystems within their vertical software company. It's certainly very useful, and it's where a lot of the interesting data is, and you certainly end up with those interactions. But it's also useful to know and understand that your users actually want that feature.
Yeah, absolutely. Luke?
I mean, I can give the VC kind of advisor type answer and then the operator advancer after that, which is number one, if you're a startup and you're trying to like get customers, you have to have some form of wedge. And if you're a SaaS vertical, you have to solve the number one pain point for that business, right? I think Boulevard started with just appointment software and they just did it better. It made it super easy for a nail salon or hair salon or spa owner to just book the appointments and manage that part and maybe need one less employee. And then you start adding features from there. So my advice is always focus on the underlying customer pain points where you can actually add value and build a wedge and build a loyal customer base. And then when you need to add payments, do the thing that's the fastest and the easiest so you can just keep focusing on the main thing still, right? And then at some point, you're going to want to optimize costs. And that may mean switching to something else, or it may mean like scaling and negotiating a better deal with the existing partner. But then at some point, we've signed a massive partner that's a global like mega cap, and talking to one of the like senior leaders there, they're like, we're at the point now where we're still trying to maintain a certain amount of growth, but we're also having to get basis points out of the costs of financial services. And when you get to that stage, it's very different. You're thinking about how do I actually build directly to the metal myself at this point? How do we build the same way Darragh does in every geography we're in? Or can somebody else actually do that for cheap enough to make it make sense? So there's this evolution of a company over time, which is like, just be relevant for your customers first. Like, and get the financial services turned on. Like absolutely don't try to do lending yourself. You can partner with somebody to make it happen. But adding all those features, like people can help you go fast and do that while you focus on solving the customer problems. And if you are lucky enough to get big enough and have enough revenue where the basis point rounding error matters, like that's amazing. Pat yourself on the back and then think about building it yourself later. But like it's a journey with every company.
Yep, absolutely. I think that is a perfect place to leave not just this episode, but the series. Darragh, thank you so much for joining us. This was really fun.
Thank you for having me.
Thanks for being on. I appreciate it.